What's up guys, John here. I'm a certified public accountant for over 20 years. I work with many clients in all walks of life, so I have dealt with many different audit scenarios. What I'm going to share today is based on my professional experiences. So please watch the whole video until the end so you will know all the red flags. The first red flag I want to show you is misreporting or not reporting all income. If you get a tax form like W-2s, 1099, W-2G for gambling winning, remember the IRS get a copy of that form also. So don't hide any income. Make sure the number reported match with the tax form. The IRS actually use computer system to match the number. So for example, if your gambling winning is $1,203, and you inadvertently put $1,201, then the computer will pick up right away there's a mismatch. So don't make the mistake, because you are going to get a tax letter for just a small mistake, and you don't want them to scrutinize your whole entire tax return. The second red flag I want to show you is earning more than $200,000 in income. Just based on the data that reported by the IRS, the percentage of people being audited if you make less than $200,000 is 0.2%. However, if your income is between $200,000 to under $1 million, the chance of being audited is 0.4%. That's 4 times higher than the person who make less than $200,000. So just purely because of your income bracket, the IRS just want to look into you. And a lot of time it's based on the computer random sampling. So in that case, there's nothing you can do, but just bear in mind, anything that you reported for expenses, you need to have a solid backup document to support the deduction. In that case, then you could sleep at night, like a baby. You nothing to be afraid. If you then ask for any documentation, you have everything to prove. The third audit red flag is major change in income. So it's either major change, you increase the income or decrease. The IRS computer will just flag your tax return and look into it deeper. Many times it will lead to an audit. So what the IRS do is, since they collect a big sample of all the different tax returns with different income bracket, deduction and all that, they have a very solid data, and they will use a bell curve to see what the average. If your tax data fall within the norm under the bell curve, then most likely you will not get audited. However, if you have big fluctuation in certain income category or expenses category, it will just be picked up by the computer. Then an IRS agent will look into it just to see if it's reasonable. If they suspicious of something or they just want to look into deeper, then they will start the audit process. The fourth red flag is large charitable deductions. If you claim the deduction that are higher than the average taxpayer in your income bracket, then make sure you have all your tax receipts from the charity to support your deductions. Most of the time, it's an audit via the mail. Basically, what they want to do is they will ask you for all the tax receipts to support your charitable deduction. So just make sure you have it. Nowadays, you can scan them, convert them into a PDF file. In that case, then you are nothing to worry about. If for current year, past 2-3 years, you still have certain tax receipt you haven't you got it, I would say contact the charity, make sure they email you a PDF copy, and make sure you have that in your file so that you know you have something to support, right? The fifth red flag is taking home office deduction. I mean, it's a legitimate to claim home office expenses, but it needs to be reasonable. You need to use the square footage of your workspace in relation to your total house square footage. If you have a room that's dedicated for your home office, then you can easily figure out the area that cover in relation to your total house. A lot of people nowadays, because they say they work from home, they take your laptop or iPad, work in the living room, and they want to claim the whole living room is my home office. That's a bit aggressive, because usually the living room is much bigger than a room that you occupy. And if you claim that your living room is your workspace, that might be I find it very aggressive, because the business percentage will become more than 20%. And that's definitely a red flag. So the general rule, I recommend you taking home office expense under 10 to 15%. That will be very reasonable. The sixth red flag is use rounded number for all your expenses. So for example, if you say office supply, 5,000, computer expense, 2,000, meals and entertainment, 2,500. You know my point, right? If everything is rounded number that looks like estimates, that's definitely a red flag. If you can, tally up all the expenses, use the actual number. It's very rare all the expenses that you reported, it's a rounded number. So that's definitely a red flag. The seventh red flag I want to show you is taking a large meal expenses. The IRS has a pretty good sense of what most people and most type of business spend on meal. They have all the data. They have all the statistics already. So they know what's the norm. So if you claim an outsized expense, they will draw their attention. So the amount of business meal expense is in relation to your total revenue. If you have a $2 million business and you take 10,000 meal expenses, doesn't seem so crazy, right? Because you do have to prospect, you have to do some marketing, you have to meet prospective client, you have to treat your client. So then business meal, you spend $10,000, that looks reasonable. But if you have a 50,000 business and you take 10,000 meal expenses, that just doesn't look right. And the IRS will pick up on that. And you will very likely get audited. Okay, so I would like to get some feedback from you. Comment below, let me know if these tips help you. I also do provide private financial and tax consultation. So for any inquiry, my email can be found below in the description section. I hope you learned something today. If you enjoyed this video, please give me a like button and subscribe to my channel. I produce new video every week and I give you a lot of actionable tips. I don't want you to miss it. So I'll see you in my next video.